following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've had some action, as they say in the trade. It looks like, as you can see from the DAX chart that we posted, that the election certainly made a difference in Germany. The German DAX moved well over 100 points. It's up 3% now. You can see that big move up. Folks, the fills that you would have got during that time would not have been the best fills that you'd probably ever gotten, but they still would have worked because it was in such a strong trend up. How much selling was there? I'm not sure, but there might have been a great number of gaps, if not one or two. I happened not be up during that time, but it was pretty wild, as you can see here. The French market is up better than 4%. It opened up 5%, but sold off just a tiny little bit, but a very, very small amount. Okay, let's get on with, excuse me, some of these other things. I've got one question about the Bradley model, but before to get that, I wanted to show you what happened in the gold market last night, folks. We'll get to the euro right after the gold and silver, but these are ones that really deserve our attention this morning. As you can see here in the gold market, we opened at 1274. Down about $15. We ran to be down $20 on the low. That was an exact 61% retracement of the low from the 9th, and it was also a 1.618 expansion from the low on the 19th. And if we quickly look over to take a look at silver, you'll see that silver did almost exactly the same thing. So this is major support that we've seen here in both gold and silver, folks. We get below those numbers, we're going to be looking at much, much lower prices in both gold and silver because they hit their spot on in the midst of a big battle that was going on. So pay very, very close attention to that. Now, let's take a quick look at the euro here because that's the one that looks the most interesting. This is what I was focusing on in the newsletter over the weekend, and also what happened over the over on Friday when we had Bill Meridian on, and he believed that Le Pen was going to be in there, which he did. But as you can see, the market reacted quite bullish. We got up to that 78% level. We didn't quite make the 110 level. We got to 109.35. And since that time, we've just been going back and forth, doing very little. Long term, folks, the euro is still bearish. We're going to have to wait until May 7th when this runoff happens to see if this is, if we get up to this 110 level, which would be about normal given the fact of where we are right now at, say, 108.50. That's only 150 pips away. A couple of the other markets acted pretty dramatically. The dollar yen was, quite a bit moving, up 150 points. And then, of course, the British pound didn't do anything. All it did was complete a 78% retracement of the thing. So we'll watch this as we go through some of these things as we go through. Okay, anyway, that's what I'm seeing on some of these things that we're looking at here early this morning. The stocks, we're going to make a new high in the, let's just put this up because this is going to be a really interesting one here. This is the Nasdaq. We'll put it up so you can take a quick look at it. Remember, most of these gaps will be filled, folks, so pay attention to that. But up at this 55.20 level, we have some a really nice 1.27 expansion and a 3 drive to a top pattern in the Nasdaq. One other thing on a astro note, we have a new moon tomorrow, and we also have Venus is getting ready to turn retrograde. Folks, if you late at night or at nighttime when it gets pretty dark, sometime after about 9 or 10 o'clock, or very early in the morning, which is best when it's still dark, is to go out and take a look at the new moon. It's just absolutely incredible. And you'll see this big, bright porch light sitting right next to it. That's Venus, the morning star. So, and that's going retrograde, and that'll have a lot of effect on some of these markets also. So remember the words of Isaac Newton: what goes up sometimes will come down, but we'll have to wait and see. Since we're talking about that, I wanted to mention here about the Bradley model. Someone's asked a question about it, of why I, got into astrology. Well, there were a whole bunch of reasons, but one of the main reasons was, of course, the Bradley model, because when we start doing these with Dr. Miller and Jim Twentyman way back in 1986, we had several years, quite a few years, where it was absolutely a perfect fit. In other words, it was if you had the actual layout of the stock market before the beginning of the year, and it worked all the way through. Now, unfortunately, it doesn't work that well, but if you'll just look at what's happened now, you'll see that the overall trend of the Bradley model has been high. And if you look at some of these key dates, like if you look at the date on March 1st, you'll see that was a key Bradley date. We had a key Bradley date on the 17th of April, and we've got another one coming up here right around the French election on May the 8th. So these are going to be really, really good spots to look at it. But that was one of the major things that made me realize that there was something there, with these things, with the astrology. But boy, I have not found any holy grail or anything like that. But on years where the Bradley model is spot on, it's really spectacular. Yes, Marshall, that's what J.P. Morgan said. Millionaires don't use astrology, billionaires do. And believe me, when he was a billionaire, there were very few billionaires. And he had a full-time astrologer, Evangeline Adams, and our good friend Norm Winsky at Astro Trend actually bought most of Evangeline's Adams' library after she had passed away. So he did, work on that, but he never mentioned it very much at all, as did W.D. Gann. Gann did not talk about it very much on his charts. If you go back and look at some of his old charts, you'll see markings for the Mercury, and you'll see markings for Mars and some of the other things. So he was doing things, also with the astro. But the most amazing part about W.D. Gann was he was a 33rd degree Mason, of which geometry is their holy grail. And believe me, he never mentioned the Fibonacci word one time in any of his writings. Over 40-some years, he never mentioned it one time. And he had even gone to Egypt and studied the pyramids. So he knew about it. He just didn't tell anybody about it. Why, I don't know, because it's certainly not the holy grail either. It's just another way of looking at price swings. So we'll have to wait and see. I do believe that sometime before the big casino ask me to trade from a different level, that we will see a segment on CNBC, either 5 or 10 or 15 minutes, talking about astrology in the markets, but it won't come from somebody like me or Bill Meridian. It'll come from MIT or Harvard or the Church of What's Happening Now, baby, but it won't come from me. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are make a correction here. Venus actually turned direct on April the 15th. I didn't have my work in front of me this morning, so I knew it was sometime during April, but I missed it. It was actually 2 weeks ago, 10 days ago, 9 days ago. So that's the star that you see in the morning, though. It's really quite beautiful. So take a look at it. If you see it, let's switch over here for just a second and take a look here at the interest rate markets, because these are ones that are very interesting. We're going to be looking here to start off with, which is the German Bund. We looked at this last week. As you can see, last Wednesday, we had made a top up there at that 164 level. That was a 3-drive to a top pattern. It was in addition to being a perfect ABCD pattern, it was perfect in symmetry as far as it was 22 days up in the first move. And as you can see, that first move also had a beautiful ABCD move also in the middle of it. Then you came down, guess what, for 22 days. And then you had this big rally for another 22 days. And then you had the big sell-off, which culminated, well, I don't know if it culminated last night or not, but we had a big drop in interest, big drop in bonds and notes, which means interest rates are going higher. That's what's so amazing, is that the U.S. dollar is getting hit, because with interest rates going higher, that usually means that people will be converting dollars in order to buy treasury bonds to get the higher rate. But whether that's going to continue or not, we'll have to be able to wait and see. Now, I do want, since we're chatting a little bit here about the crude oil market, here's a market that's been very oversold for a very long time. And here we are coming into we'll do crude oil and also heating oil because they're part of the complex. But if you take a look here at the WTI, West Texas Intermediate Sweet Crude, you'll see that we made that 61% retracement on Friday, pretty much where it's trading right now at 49.63. And then if we take a look, of course, at the heating oil, which is also part of the oil cracking process, you'll notice that it is also trading at the 61% retracement. Now, does that mean it's going to stop there, folks? Of course not. And the reason why is that you've had, 7 straight down days of pretty good action to the downside. So you want to make sure that it's going to hold that level of 49.25 in the June crude. But it's at the level where it should reach some really good support as near as we can possibly tell. That's last at trading at 49.42. I would not be surprised to see it make a new low here because we're coming in to another, we have this new moon coming in tomorrow, and we're within a day, so we're in the zone of the new moon. So pay attention in here because we get a lot of changes and trends around new moons under a lot of different things. So watch that very closely. And that's one of the things that I'm paying quite close attention to this morning are those three things: that gold, silver, and then also the crude oil. Those are the ones that I'm watching, very, very closely. Now, someone asked me last night. I didn't get the email until very early this morning about how I handle trading the euro when you have a big gap up of over 100 and some points. Well, it didn't get to the level that I wanted to sell at, which was 110, and it only got to 109.35. But since that time, now I didn't look. I mean, this is what I'm seeing, but I didn't see this because I actually slept a little bit last night because I thought that the markets gapped up and that was probably going to be it for a while. So far, that's right. But if you'll take a look here, you'll see that we were right at the, we've had a nice ABCD correction. We've had two 70-point moves. We've had two 78.68 retracements. That's a 135 pattern. Absolutely perfectly there at that 108.40. And as long as that crude oil can stay above 108.40, folks, it's flat out bullish. That's the way that looks. But the pattern is certainly there. Remember, this euro is a monster as far as volume and dollar amount. I would have guessed they probably traded probably $500 million already this morning would be my guess in real money, because it's caught some people by surprise, and we've had very good volatility by moving up almost 200. Yeah, it moved up 200 points and then down 115. So we're having some pretty good action in the euro, which is ideal for, pattern recognition. That's one of the things that it will start, getting you moving in the right direction. We've already talked about the gold and the silver. Just watch those lows overnight that we had in the 1265 level in the gold, and I believe 1755 in the silver. So watch those. If we go below that, that's telling us that we've got a pretty big move to the downside. Tomorrow, as we've been informed for our good friend Marshall, we have Mercury at 0 south latitude, which is, very, very important. And also we have this new moon. And another thing is on Thursday, we have perigee, where the moon is as close to the Earth that it possibly gets, which is 251,000 miles, which, by the way, Mr. Pythagoras in 600 BC knew that number, and he was a pretty smart dude. Okay, let's go on to look at a couple other things that should be interesting for today. Of course, we've already talked about the stock market, but we'll look at the stock market in context. There's two things I wanted to show you here. Let's just get to the Dow Jones E-mini first. If you'll give me 1 second, I have to... Oh, hello, Federal. There it is. There we go. Here's where we are in the Dow Jones E-mini. We'll put this up. As you can see here, on around the 20th of April, we did make that little 3 drive to a bottom pattern. We closed at 205.50 on Friday, and it looked like we were going to make another large move down to that third gap in the Dow at 20,200, and I still think we're going there before we make new highs. But we've had a really good correction here. As you can see here, we've went up and made the exact 78% retracement from April the 5th, which was the high from Stan Harley. And I was checking with Stan early this morning, and Stan's looking for the market to come down one more time into May 8th. And so that's the day after the big friend selection. So whether this is going to be nothing more than a short covering rally, we'll have to wait and see. But it's the same rally that we had between March 27th and into April 5th, where we're doing almost exactly the same thing. And as you can see in this Dow Jones, we're in a downtrend. We have been since March 1st, but believe me, this market has not really come down very much. If you look at the Nasdaq, I mean, this thing has been, I think I posted, let's do it again, but look at the Nasdaq here, folks. The Nasdaq is actually, blowing through and made new highs. That's exactly what happened in 2000 and when we were after the dot-com bubble. The Nasdaq didn't top until March 24th. The Dow topped in January. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the Nasdaq composite. As you can see, as of Friday, we were making a head and shoulders pattern, but because of the strength that we're going to see this morning, this is going to turn into a 3-drive to a top pattern, just like we're seeing in the Nasdaq NQ, the smaller one. And remember, the smaller one is really affected by those 6 big stocks, of which Amazon, Apple, Google, Netflix, and I can't remember some of the others. Facebook are really, really instrumental in making that thing rock and roll. So that's one of the reasons why we could be looking at that as something pretty dramatic as we start. Well, the market's opening sharply higher as opposed. The other thing, folks, is to sort of keep an eye on the market for the Treasury bonds and Treasury notes. I want to get to that level here just 1 second, and then I have to do something here. I wanted to get to that. Here it is, right here. Now I'm going to put the bond. Well, let's do the notes first because that looks very interesting. This is the same pattern in the notes. You'll see it looks exactly like the same pattern we're seeing in the composite. So whether the timing will be the same or not, I'm not really sure. So keep an eye on that. Give me 1 second, folks. I have to place an order in here, and then I will be right back with you. Hold on 1 second. Okay. Okay, and anybody wants to guess what I'm doing, you can guess, but I have to put this order in, and there we go. All right, give me a second here, and then we're on our way to see who's going to. No, sir, it's not gold. No, I tell you what it is, but I don't want the extra pressure, for heaven's sakes. No, I won't. No, that's not the way it's going to work. Okay, let's move on. We had a question from one of our listeners about the grain markets, folks. I am really bullish the grain markets. Corn, wheat has gone down and made new lows. It hasn't followed through, and we're over a major, new moon. So I think wheat's getting ready to rally. I believe beans have already started, and corn could be doing the same thing. But bean oil has already. Remember, we posted that here. I can do that again. Just 1 second here. At least I think I can. Let's get the bean oil. Yeah, you'll see the bean oil has had a really beautiful chart here. Had this really beautiful Gartley, and we've gapped up again here. And that's pretty much what you're looking at. And I think, Matt's spot on. Boy, Matt, you're a regular James Rockford of the Rockford Files. I was watching the Rockford Files last night, reruns on one of the old channels on cable, and oh boy, we had so much fun with the Rockford Files. Jim Twentyman's main squeeze at that time was Margot Grant, who did all the catering for Mike Milken. She had, and she also did it for the Stephen J. Cannell and also Roy Huggins, who were the producers of the Rockford Files. And we would go out to Paradise Cove when they were there and have lunch or late afternoon snacks and stuff with the actors and stuff. It was really exciting. In fact, as I spoke with Twentyman about it yesterday, we were chatting about how much fun that was, back in those days. So anyway, those were the old days. Okay, let's move on to other things. The hogs are still going down. I don't think that you could do anything in hogs here. I can put the chart up, but folks, that's like trying to catch a falling safe. I mean, that thing is just had a beautiful 3-drive pattern that failed like a car that's blown its gaskets in the Indianapolis 500. Believe me, this thing is really look bad. So we're down into that mid 60, well, high 60s in hogs. I see no reason to look at hogs here at all. I just don't. There's not a pattern there that is what it's going to. You wait a few days, maybe you'll have something. But here you're trying to catch a falling knife, and that's not a fun thing to do. I've done it before, and I still do it, but you still don't like to get out of it. Yes, we do have a very strong market this morning. You would expect advanced decline line to be something like that, but the whole world thinks something has changed. Now, whether it has or not, I don't know, but what would happen if the market would give most of this back like we've seen it before? Things would be a lot different. Remember, this was just the first part of the election in France. It's, pretty much, what we're watching here. But anyway, that's neither here nor there. Just look at the patterns, try to get them to, line up, and that's what we're watching. So let's take a quick look here about soybean meal. I'll put this up here so you can take a look at it. The soybean meal looks, very bullish also. We had a test of the 78% retracement. We had a really nice pullback that stopped at the 61% retracement, and we're a couple dollars higher this morning. That looks like it wants to be moving, pretty good. So this will be something that we'll be keeping an eye on as we go through here for the rest of the day. One other one that looks really interesting. Let's put the wheat up. I wanted to show you wheat because wheat did go down, and this is really an interesting one in wheat for those of you that like astrology. Wheat moves to the full moons and new moons like magic. I mean, it's just really amazing. We've got this new moon now tomorrow, so we should be rallying. We made a 1.618 expansion of the swing from the 27th, which was a low point. Then we had a little ABCD correction, and I missed that. I did not see that small ABCD correction over 10 days. My gosh, that's got to be one of the most bearish patterns you can have. A market that can't even make more than a small ABCD correction after 10 days doesn't look very, very strong to me. So watch this as you're going through looking at some of these things, because wheat is very important in here. It has some really nice cycle stuff, and it should be ready to rally. Now, whether it's going to or not, we'll have to wait and see. Now, we are talking about the bonds here in the Tiger Den here at TFNN. One of the things that we're looking at here in the bonds, folks, is the fact, that's right, Norm Winsky says, no brains, trade the grains. And really, that is really the easier one to trade, is to trade wheat, corn, and beans, especially wheat and corn. The beans get a little crazy at times, but wheat and corn are really, they're very predictable. They follow ABCD patterns like but some of them don't work. I mean, bada bing, bada boom. You got to get out of the way and wait for the next train to get by, folks. Remember, this is a business of probabilities. It's not a business of certainty. You're never going to find anything that's going to be certain. That's just not going to happen, at least not in this business. That's for sure. But anyway, keep an eye on the wheat, keep an eye on the corn, keep an eye on the beans and bean oil and meal. They all look like they're ready to turn. And this could be a significant turn because we're over some seasonalities that are very, very important. I'll post one of the seasonal for meal here from our good friend Larry Williams. And you'll see here that we're on a really strong seasonal pattern for a meal to move to the upside. So pay attention to that. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I'm going to post the chart for the Dow Jones and show you the gaps that are here, folks. This is why when you have the Dow Jones gap up 200 points, the S&P gap up 25 points, those are not low-risk trades, folks. If you're buying, that's pretty tough. So be really careful when you do this, because you have to determine what your risk is going to be. And if you'll notice here on this Dow chart, we have 4 major gaps. 2 of them have already been filled, and we've got another one just 500 points below here. So keep in mind that these things can be rather tricky. So I have a really hard time buying into, buying in a market that's up quite a bit, well, I'm sorry about that. I didn't mean to do that. Just a second here. I hit the wrong button on that. Give me a second and I'll get this up here so we can see it. I didn't mean to put that den messages in there. Not the sharpest knife in the drawer. There we go. But you can see the gaps that we have here, and they have been filled. But the biggest gap, of course, was the one on March the 28th, when we had the joint speech in Congress and the Senate, and the market was up 250 points, and then look what happened. And then, down she went. And not only that, but we're over this time of a really strong lunar cycle here with the new moon coming in, which is going to be very, very interesting. This is going to be almost a super new moon because we have perigee coming in on 2 days later. It's not on the exact date, which would make it a super new moon, so it's very, very close. Okay, the key levels, of course, today in the S&P are those old highs at 2383. The lows down here, we had the old low at 2317. And this market has been self-correcting ever since we started down in the middle of March, and so those are the ones that you want to watch very, very closely. Now, whether this is going to be that way or not, I am not sure. Okay, we have another question here about the British pound and how this is affected by Frexit, which is what the name they give now to France. I don't think it means very much. The market shows that it's not meaning, not meaning very much right now, because all we've done on a weekly basis is make a ABCD pattern. You can see the Brexit high that we had back on, June 27th that was at a, perfect 61% ABCD pattern. That was a really nice one to look at. But right now, this is really not done very much. It might catch up a little later, but right now it is certainly not, going along. We have a question about the earnings. Folks, I don't follow these earnings. I mean, you see how the market reacts to them. Sometimes the earnings are good, the stock goes down. The earnings are bad, the stock goes up. So, I gave up on that stuff a long time ago. All I do is I look at the patterns. If prices are going higher, you're probably in an uptrend. If prices are going down, you're probably in a downtrend. That's, what I try to do. And then I match up the numbers and the ratios. And then bada bing, bada boom, if it comes out the right way, then I'm sitting there, ready to look at it. So this is going to be a wild day today. Fact is, the whole week should be wild, because we've only got another, another week from now. So, 6 days from now, the month ends, and we start into one of the stronger seasonals, which is sell in May and go away. But these are just things that we're looking at. So we'll see what's happening here. Anyway, those are the ones that I'm watching, from a major perspective here on some of these things. So just keep in mind that that's what we're watching. But anyway, if the market would reverse today, and I'm not saying that it's going to, but if it were, you would be looking at a really good bottom to be a buyer towards the end of this week. The ideal situation would be to buy around the 28th of April. And the reason for that is that, and this is really a long shot. You're talking about a market that's up 200 points, but it's only 15 minutes into the trading. If that were to happen, you would have a really good pattern coming in, and that would be a very interesting spot to look at. Also, we have to respect the work of Stan Harley. He's been spot on with these markets, and he's looking for May the 7th as a potential really good spot to look at a pretty good low in the market. I believe that's a 39-day cycle low that Stan was telling me about. So we'll keep a very close eye on that one also, but that's neither here nor there. We got a lot of trading to get through today before it's finally over. Alrighty, now we had a question about the dollar index. I think we've already covered that, but let's just put it up here. I believe the dollar index has got to be down around the 90. This is what I was looking at over the weekend. Yes, May 7th is the French baking runoff, so we'll see what's going to happen. Yes, that does fit in with what Stan Harley's talking about. That's that 39-day cycle. I believe it's 39 days. I'll have to ask him, but I'm going to have him on next week or later this week just to have him on, because he's been giving us some really great information. So. But, Bill Meridian was saying that Le Pen was going to do really well, what she did, but look how the market reacted compared to what most people thought. So that's it. Here, if you look at this dollar index, we've broken below the 78% retracement level last night when the election results came out, and we're heading down towards this. Looks like we're heading down to the 97.50 level. That would be equivalent to about the 110 level in the euro. So those are the levels that you want to be watching to see if that's going to be the case or not. Someone's asked me if I've ever spoken in France. Yes, I did speak at a Astro convention in France in 1991. I had an interpreter there, gave a 45-minute speech. Had a rousing ovation. They threw some nice fresh vegetables at me, and I was able to make a nice a little Italian salad, but it was actually okay. But I've not done very much work in France at all. There's not a lot of traders in France, folks. It's really amazing. You get to the UK and you get to Denmark and you get to Sweden and some of the other countries. There's a lot of traders, but for some reason there's just not that many in France, and there's not that many in Italy. There's some in Italy, but not like there is in the UK and Denmark. Denmark has a lot of traders. They really do a lot of technical work, and really good technical work, as a matter of fact. So hold on here just a second here, and we'll get on to the next one. All right, the next question that someone asked me about here was the banking index. Let's just put this up and show you. This has been the weakest of the market here. Let's get this banking index up, and you'll see here. There we are. The banking index should be up pretty good today because we were in a 5-day rally, and that's going to extend today. I don't know how high it's going to get. My guess is it should hit about 9180 or 92 in the banking index. I don't know where it's trading right now, but that would be the 78% retracement off this. 877-927-6648.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. And when it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're still up quite a bit, almost 200 points in the Dow, 25 points in the S&P. How it's going to end, we'll have to wait and see. But remember, we do have some unfilled gaps on the Dow that will be filled. The first 2 have already been filled. The third one comes in at 20,200. That's a good 600 points from where it is right now. And that could be filled quickly or maybe a little bit later, but almost all these gaps in the Dow, will be filled. Now, we've made new highs in the Nasdaq, and as I mentioned before, that's not unusual. This happened in 2000, and this market has been the most bullish of all. So we'll see what's going to happen with that. The 2000 market, when we had the dot-com bubble, that was a once-in-a-generation phenomenon. And of course, the Nasdaq gave back 85% of that whole move from 1993 to 2000, as you recall. And we haven't had any markets like that for 7 years. Back in 2008 was the last time we had something like that. Regarding the gold and silver, as long as we don't take out these lows at 1265 in the silver and 1265 in the gold and 1750 in the silver, this market looks like it has legs. It really needs, the gold's got to get back above that 1279 level in order to be bullish again, I would think. And whether it can do that or not, remains to be seen. We've had a relatively nice smaller swings this morning that fit up really nicely with the patterns, but right now it's not really telling us very much at all. Regarding the bonds, pay close attention to the level of 153.13, folks. That's going to be a very important spot, going back and looking historically where bonds have had major reversals from. So that's one that you want to watch very closely. And finally, one more last time, is to watch the crude oil, watch the heating oil, because they're hovering at 618.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.